Good afternoon, everyone. I welcome you all to the webinar on Union Budget 2026 Indirect Tax Proposals. So, to speak on the topic of amendments proposed in customs law, we have CA Shyam Sundar sir. To have his introduction. He is a practicing chartered accountant specializing in GST litigation and compliance under FEMA, FTP, and customs law. He represents clients in audits, adjudication, and appellate proceedings, and he is also an ASIN speaker and regularly conducts technical sessions for professionals and students, combining legal expertise with practical insight. I now request Sam Shyam Sundar sir to please start his session.
Yes, madam. Thank you, Tanya, madam, for an introduction. So, good afternoon, everyone. So, the Finance Bill 2026 was presented by our Finance Minister on 1st Feb 2026. There are various amendments which was brought in the Finance Bill, particularly with respect to the direct taxes and indirect taxes. So, today, I'm going to discuss about the changes which was brought in indirect taxes, particularly with respect to customs. The Finance Bill 2026, Chapter 5 covers the amendment with respect to the indirect taxes. So clause 129 till clause 136 covers the amendments which was made in customs. Clause 129 to 135 speaks about the amendments made in Customs Act, and clause 136 speaks about the amendment which was made in Customs Tariff Act. So, let me first present my PowerPoint. So, this finance bill with respect to customs mainly focused on the domestic manufacturers and the exporters. So, what this customs amendment was with respect to is mainly for the domestic manufacturers by reducing the duties which are charged in the inputs which are used for the purpose of manufacturing. And it also brought some measures for certain sectors which are engaged in exports. The changes in the finance bill was brought with related to customs. The certain definitions are amended, and Customs Tariff Act also undergone certain changes. So first, I'll be covering on the amendments with related to Customs Act and the notifications and the circulars which are being issued. In this seminar, I won't be covering Customs Tariff Act, because if you see the notifications which are issued by the CBIC, Notification 1, Notification 2, Notification 3, Notification 4, and Notification 5 of 2026 speaks about the customs tariff notifications. So if you see the notifications which are being issued, you can see the references are made to the yearly notifications. For example, if you see notification number 2/2026, where major tariff rate has been changed. If you refer that notification, it says that the certain tariff items are either omitted or substituted with the previous notification. For example, if you see certain tariff item, it says that this tariff rate is omitted by making a reference to the previous notification, which is 45/2025. So in order to check the tariff rate, you have to check the notification number 2/2026 with making a reference of 45/2025 notifications. if you check the notification, either the rate will be extended to a certain period or it will be omitted. There are no rates which are specified in the notification. You see the early notification, there are rate changes which are specified, but in this notification, there are no specification which has been made. Only the reference has been made to the previous notification, and there are certain exemptions which are given for certain sectors. Only that exemptions alone covered in the tariff, in the notification which are issued. So this is the reason I'm not covering the customs tariff. I'll be covering the changes and amendments made in Customs Act rules and regulations. So in order to promote export, there has been a concession which has been given to three sectors. One is with respect to fisheries, and second is with respect to leather, and third with respect to textile industries. With regard to fishery industries, previously any seafood products, any inputs used for seafood products are exempted from duty on 1% of the FOB value. So, for example, if any import is made with respect to the seafood products, it will be exempted from the duty on 1% of the FOB on the exports which the exporter is doing. So now that 1% has been increased to 3%. This is the concession which is given to the fishery sectors. With respect to leather and textile industries, previously, if any inputs which are imported to used in the manufacture of leather and textile products needs to be exported within 6 months. Now the time limit has been changed from 6 months to 1 year. And also there are certain concessions which are given to the leather and textile industries by making certain inputs basic custom duties as nil in order to promote leather and textile industries exports. So this is with relate to export benefits which are given to these sectors. And there are certain basic customs duties become for energy sectors such as mineral.
So you need to share the screen again. Sir, mute. Sir, unmute yourself.
Am I audible now?
Yes, sir.
Yes.
Screen is not, you need to press F5.
Yes.
Right.
So
Perfect.
there are certain. Okay. So there are certain amendments in the advance rulings also to mitigate or to reduce the litigations. They have extended the period of advance rulings. This is one of the measures which they have brought in, which we will be covering shortly. And the focus was mainly on the digital integration of all the exports and imports which are being done. There are various measures which was brought in by the finance bill to digitalize all the exports and imports which are being carried out without the intervention of the either by the customs officer and to clear the goods in faster manner. So now during the budget, the finance minister has announced that there will be a rollout of single integration portal for the customs, and many digital process are also brought in. For example, in case of exports, the goods needs to be registered with the customs officer. Now that has been rolled out. Once the cargo arrives at the export port, once the cargo arrives at the port, the export, the the cargo will be scanned, and then it will be registered automatically, and let export order will be issued without any intervention of the customs officer. So there are certain measures which was brought in only to digitalize and make the exports and import procedures more faster without any intervention by the customs officers. So first, let us see the amendments which are made with respects to the Customs Act. Section 1 has been amended. What is Section 1? Section 1 of Customs Act 1962 speaks about the applicability of the Act. It says the Act is applicable to whole of India. If you see the definition of India, it says India includes territorial waters. So this section has been amended by inserting the word next to the territorial waters, that any fishing or fishing related activities which are carried out by Indian flagged fishing vessel beyond the territory of India will also come under the jurisdiction of customs. So the territorial water is 12 nautical miles from our baseline. If an Indian fishing vessel which carries on these activities beyond the territorial waters was previously not covered under the jurisdiction of customs, with insertion of this amendment, the word Indian flagged fishing vessels which undergoes the activities of fishing beyond the territorial waters will also be covered under the jurisdiction of customs. The word used is Indian flagged fishing vessel. So what is the definition of Indian flagged fishing vessel? So it has been notified by way of section 2. The new definition has been inserted. 28A. Previously 28A speaks about the international courier. Now it has been moved on to 28B, and 28A has been inserted with a new definition, international flagged fishing vessel. So what is this Indian flagged fishing vessel? Any vessel which is entitled to fly Indian flag or Indian flagged fishing vessels. The definition is very clear. It says that any vessels which undergoes fishing related activities and are entitled to fly the flag in the vessels or the Indian flagged fishing vessels. So with this amendment, now the Indian flagged fishing vessels which undergoes these activities also comes under the jurisdiction of the customs. Okay. Then there is one more insertion of the section 56A in the Customs Act. I'm just referring to this section because this has relevance with the Indian flagged fishing vessel. This section has been inserted in order to treat any vessel, fishing vessel, Indian flagged fishing vessel, which catches the fish beyond the territorial waters and brings to the port of India, it will be treated as an imports. And if any vessel which has landed in the international port, the same will be considered as an export. So first, they have inserted the definition for the vessel which are engaged in the activities of fishing and fishing operations, and then they have cleared what is Indian flagged fishing vessels, and third, now they have inserted a section to treat any goods or any fish relating activities which are carried on, and the products which are brought into the Indian shore will be considered as an imports. And if any fishing related activity products are landed on the international port, it will be treated as an exports. This is the major amendments which was made. So next, the amendment is made to section 28 of Customs Act. If you read section 28, subsection 6, clause 1, it says that recovery proceedings for duty short paid, not paid, or erroneous duty refunded. So this section only referred about the duty. There was a dispute. For example, in case if the duty is not paid and the notice is issued to the exporter or the importers, the notice is issued with the duty plus interest and penalty. Section 28(6) subsection 1 covers only about the recoveries of the duty, but it does not covers the recovery of the penalty. So there was a problem for the customs officers to recover the penalty, since there is no specific provisions in the Customs Act for the purpose of recovery of the penalty. So in order to recover the penalty, this section has been amended with the word that is deemed to be conclusive, and penalty so paid shall be deemed to be charge of non-payment of duty. So what does it mean? It says that if penalty is not paid, it will be treated as a duty not paid. So now the penalty which has been not able to be recovered from the customs officer due to the provisions which was not there in Customs Act, with this insertion, they can also start the recovery proceedings for the penalty, since it has been inserted in this section. So now the section covers both duty, interest, and penalty. That is the relevance for insertion of this section. Then there is an amendment in section 28J. This section speaks about advance ruling. So the time limit of the advance ruling is basically 3 years. If the 3 years from the date of rulings. So now this time limit has been extended from 3 years to 5 years. So if any advance ruling, which has been passed to the applicant after 1st Feb 2026, it will be valid for a period of 5 years. The clarification is also given. What if the advance ruling is issued prior to 1st Feb 2026? The amendment is made. If any advance ruling was made before budget, the same can be extended for a period of 5 years from the date of ruling by making an application. So for example, if the ruling was passed on 1st April 2024, previously the validity is for only for 3 years. So 24, 25 and 26. So it will be ended by 31st March 2026. Now, the applicant can give a request for extension of another 2 years for the advance ruling which they have sought. So it can be extended up to the period of 2028 by making an application. But if any advance ruling which is passed after the budget, which is after 1st Feb 2026, it is automatically extended for the period of 5 years. So this is with respect to the advance ruling. Section 47. Section 47 of the Customs Act speaks about duty deferral. So there is a regulations with regard to duty deferral. Duty deferred import regulations 2016, wherein there are certain AEOs who are who imports the goods are not necessary to pay duty immediately. They have given the time limit of 15 days to pay the duty after the clearance for home consumption. So the tier 2 and tier 3 AEOs are covered under that category. So now the deferral period which is allowed for 15 days has been extended to 30 days. So any AEO, tier 2 and tier 3 AEO means authorized economic operator. The tier 2 and tier 3 authorized economic operator who are importing goods can clear it for home consumption. They have 30 days time limit to pay the duty. Previously, it was 15 days. So there are notifications which are issued. There are certain eligible importers who are also added in this regulations, which we will be covering later. The notifications is also issued in this regard. This is with respect to section 47. Section 56A, which we already covered, which speaks about the import and export of fishing and fishing related activities carried out by Indian flagged fishing vessel. Section 67, warehouse operation reforms. So section 67 requires if you want to move any goods which is in the custom bonded warehouse from one custom bonded warehouse to another custom bonded warehouse, you have to take the approval of the customs officer in order to remove the goods from one custom warehouse and moving the goods to another customs warehouse. Now this process is changed. Here you can only declare in the ice gate about the clearance of the good from one warehouse to another warehouse, and you can make a self declaration and you can proceed with moving the goods. So this eliminates the approval from the customs officers which are required previously. So now the goods can be moved from one warehouse to another warehouse without any approval of the customs officer, only based on the self declaration. It specifically says moving of goods from one warehouse to another warehouse, but they've never specified, because there are three categories in this. Goods moved where the change in ownership from and change in warehoused goods. For example, there is a change in ownership as well there is a change in warehousing. There is a change in ownership and there is no change in warehousing. And there is change in warehousing, but there is no change in ownership. The amendment covers only the changing of goods from one warehouse to another, but it does not speaks about transfer of ownership of goods. So which means if the ownership is transferring, then it requires the approval of the customs officer. If there is no change in the ownership, the goods can be moved from one warehouse to another warehouse without the approval of the customs officer based on the self-declaration. So this makes the movement of goods faster and eliminates the intervention of the customs officer. This is with respect to section 67. Section 84. Section 84 speaks about regulations with respect to international couriers and post. So this section gives the power to the board to prescribe the format for the declaration to be made with respect to international post and couriers. If you read the section 84, subclause 2, it says the custody, the examination, the assessment, and the clearance will be done by the customs officer. However, there was a problem in this because if any goods are being exported through international courier, the customs officer have the authority to examine and to make assessment, but he does not have the power to keep it under the custody. because in the section, the word custody was missing. If you read the section 84, it says only examination, assessment, and clearance. So this section has been amended to include the word custody. Now the custom officer has the power to take the custody of the goods which are being exported through post or courier internationally. So these are the changes with respect to the Customs Act. So totally there are 8 changes. Section 1, Section 2 and Section 15(6)(a) with respect to the fishing and fishing related activities. Section 28 with related to the penalty treatment, which can be treated as duty not paid and recovery proceeding can be initiated. Section 28, which is your advance ruling, where the validity is extended from 3 years to 5 years. Section 47, which is your duty deferral. Previously, it was 15 days for AEOs, Tier 2 and Tier 3. Now it is extended to 30 days. And Section 67, where the goods can be moved from one custom warehouse to another custom warehouse without the intervention of the officer based on the self-declaration. And Section 84, where the custody of the goods which are sent through courier and post can be made by the customs officers. So these are all the changes which was made in the Customs Act 1962 from clause 129 to 135. Yes, there are totally 9 notifications and 3 circulars which was issued by CBIC with respect to the finance bill. So as I said earlier, customs notification number 1, 2, 3, 4 and 5 of 2026 speaks about the tariff notification. 1, 2, 3 speaks about the, especially with respect to tariff notification, and 4 and 5 speaks about the notification with respect to the baggaging rules. The tariff applicable for the baggage rules. So notification 12, 13 and 14 and 15 speaks about non-tariff notifications. So which we will be covering now. So notification 12 and 13 speaks about the duty deferral import regulations 2016. Whereas by way of notification number 12 by 2026, the regulations was amended. As I said earlier, the regulation was applicable only for the AEO, Tier 2 and Tier 3 AEO. Now the benefit is also available for the eligible manufacturer importer. Even they are eligible for this duty deferral scheme. So notification number 12 by 2026 speaks about who are the eligible manufacturer importer. The person who undertakes manufacturing activities and importing any goods should make an application before the customs authority on or before 1/3/2026. So once the application is made to the customs officer, the director of international customs, the certificate will be issued as an eligible manufacturer importer. Based on that, the duty deferment scheme can be availed by such eligible manufacturer importer. So previously, the regulations was applicable only to AEO. Now it is extended to the eligible manufacturer importer also. So what is the due date to file an application? It is 1/3/2026. So before 1/3/2026, any persons who are engaged in manufacturing activities and who are importing goods should make an application before Directorate of International Customs to avail the benefit of duty deferment. and it is valid up to the period of 31st March 2028. So this scheme is applicable for the eligible manufacturer importer only up to 31st March 2028. So now they can import the goods, clear it for home consumption, and they can pay the duty after 30 days. This is with respect to notification 12/2026. Notification number 13/2026. It speaks about when the duty needs to be paid under duty deferral scheme. It says if bill of entry are filed from first day to the last day of any month. For example, if bill of entry is filed from 1st April to 31st April, the duty needs to be paid on or before 1st May of 2025. So in case if I'm filing the bill of entry from 1st April 2025 to 31st April 1, 2025 to 31st April 2025, then the duty needs to be paid on or before 1st May 2025. This is with respect to this is applicable from April to Feb. With respect to March, if any bill of entry filed from 1st March 2026 to 31st March 2026, the duty needs to be paid on or before 31st March 2026. So for the remaining days, it is the following day, for the day following the month. For March, it is 31st March. For example, if I'm filing the bill of entry on April 15, I have to pay the duty on or before May 1. If I'm filing the bill of entry on March 28th, I have to pay the duty on or before 31st March. This is the time limit which is given in notification number 13/2026. There is a circular which is also issued with respect to this, circular number 3/2026, stating the procedures which are need to be followed. So these are the notification and circular issued with respect to duty deferral. So section 47 speaks about duty deferral expansion. Previously, it was applicable to AEO. Now it was extended to eligible manufacturer importer also by way of notification. And the time period is also specified for paying the customs duty. So from April to Feb, it is the due date of payment is first month of the following month, whereas with respect to March, it is 31st March 2026 if the bill of entry is filed on 28th March 2026. This is with reference to duty deferment scheme. Yes. So these are all the changes which was covered in the finance bill. The finance bill does not cover certain aspects. However, it is covered in memorandum, one of which is the baggage rules 2026. Earlier, we had baggage rule 2016, which is now not applicable and which is replaced with a new baggage rules 2026. Now this baggage rules is applicable. All the major amendments was made to these rules. These rules has undergone many changes with respect to the duty-free allowance which was given earlier. So this has been introduced by way of notification and circular. There are 2 notifications and 1 circular which was issued with respect to baggage rules. Notification number 14/2026 and notification number 15/2026 and circular number 4/2026 speaks about the baggage rules. This baggage rules was originated under section 79 of Customs Act. So it was first introduced by way of Section 79 in Customs Act. Later, in 2016, the rules has been framed by setting some allowance for the passengers. There are certain allowance which was brought in the rules, such as duty-free allowance, jewelry allowance, and travel allowance. Sorry, it's not a travel allowance. The allowance which are extended to the travelers, and with respect to the personal effects. So there are certain allowance which was brought in by using these rules. Now these rules has been erased and new rules has been inserted, which is Custom Baggage Rules 2026. So let me cover the changes which are made in these rules. So the major changes was the change in the value of duty-free imports. The duty-free imports limits was very less in the previous rules. Now there is an increase in the import which can be done without payment of any customs duty. And there is also a dispute with respect to jewelry allowance, because earlier if you see with respect to jewelry, it says the passenger can carry, if it is a men, the person can carry 20 grams of gold or rupees 50,000 value cap, or in case of women, the 40 grams of gold and 1 lakh cap has been fixed. If you see the rate of gold today, 1 gram is comes to around some 12-13,000. So if they fix the limit of 50,000, so you can carry only 4 grams of gold. So there was a dispute. In order to rectify, now there is no limit. It is either 20 gram or 40 gram. The value cap has been removed in the new baggage rules. So if it is a male passenger, the gold can be carried up to 20 grams if he stays in abroad for more than 1 year. Yes, this allowance is applicable only if the passenger stays in abroad for 1 year, and if he comes back to India, then this allowance will be allowed. For male passengers, it is 20 grams of gold, and for female passengers, it is 40 grams. So now the value cap is removed. These are the another amendments which was made. And there are certain measures which are also brought in for the passengers due to the difficulties which they are facing at the time of clearance. With respect to allowances, earlier the limit to carry, for example, if the person the previous baggage rules, if you see, there is no provision given to the passenger to declare the goods which they are carrying out of country for their personal effects. Now the provision has been made. There is a special app which was brought in, which is called Aditi. If any passenger who is traveling abroad, he can declare the goods which they are taking out, which are not personal used effects. First, let us understand what is personal effects. Personal effect means any goods used for personal use which are required necessarily for life. That does not require any declaration. Declaration is applicable only for other than used personal effects. So previously there was no provision to declare the used personal effects. You have to go to the custom station. After clearing the immigration, you need to make a declaration to the customs officer, and then you have to go through a green channel. But now there is an app which was brought in called the Aditi, where you can declare the goods which you are carrying with you 3 days before the departure or 3 days before the arrival. So based on the declaration, the import certificate or the export certificate will be provided to you. It is called the temporary certificate. So for example, if I'm traveling outside country, before my departure, I can file a declaration in CBD1 through the, in case of packaged, in case of accompanied package, through the app which was introduced. So once I have declared, the certificate will be issued. Based on that, I can take the goods abroad. So when I return back from abroad, I can show the certificate which was issued, and I can re-import the goods which I took from India. The same is applicable with respect to the foreign travelers who are coming to India. Now, when they are coming to India, they can declare the goods which they are bought in, and the certificate will be issued to them. And when they are leaving, they can produce that certificate so that the goods which are imported into country can be re-exported. This is a new mechanism which was brought in for the passengers. And there are one more amendment which also brought in these rules. The amendment is with respect to the detention. Now, the detention, if any detention is made by the custom officer, the certificate will be issued by the custom officer for detention of goods. And when the passenger, the foreign passenger, on when he leaves from India, the same can be taken out by providing the certificate. So it makes easier for the foreign passengers whose goods are detained. So when they are leaving India, they can produce this certificate and they can take their goods back to their country. So these are the major changes which was brought in through this baggage rules. The main introduction of these rules is to make the process automation. So now the CBD1 is with respect to the baggage declaration for the goods which are carried through accompanied baggage, and CBD2 is for the goods which are carried through unaccompanied baggage, and CBD3 is the import certificate which is given by the customs officer, and CBD4 is the export certificate which is given by the customs officer, and CBD5 is the detection certificate which is given by the customs officer. So the forms are prescribed by way of notification. So the passengers who are traveling abroad, the residents or the persons of Indian origin who are traveling abroad can use this declaration facility, or the person of foreign nationals who are traveling to India and while they are living out of India, they can use this certificate for the purpose of import and export of their unused personal effects. Yes. So the changes in baggage rules 2026. If you see in 2016 baggage rules, the duty-free limits are specified up to 50,000. Now the duty-free limits are enhanced to 75,000. For example, if the Indian resident who has went abroad and he is returning back to India, he can bring back the unused personal effects up to the limit of 50,000. Now the limit has been changed to 75,000. So the Indian resident can now import the articles up to 75,000 without any duty. This is with respect to the Indian resident. So the limit is now changed from 50,000 to 75,000. With respect to foreign tourists, earlier it was 15,000. So the foreign tourists who are coming to India can import, can bring the goods worth of 25,000 without any duty. So these are the changes which was brought in baggage rule 2026. And there was a issue in previous baggage rules. If you see previous baggage rules, whether the laptop will also be covered under the limit of the 50,000. But now in new rules, this limit will not be included while considering the limits for duty free. Means you can carry one new laptop or notepad plus 75,000 worth of goods. Means this will not cover in the limit of the duty free limits. So now the passenger who is coming from abroad, he can bring back the goods worth 75,000 plus one new laptop, which will not be included for the purpose of the limit which was specified. And as I said previously, the jewelry provisions is also revised. Earlier there was a value cap. Now it has been removed. So it shall be either 40 gram for women or 20 gram for men. The value cap of 50,000 and 1 lakh has been removed. Then, yes, with respect to duty. So, for example, I have brought some goods from abroad, which is other than personal used effects. The worth of the goods is 80,000. So the limit fixed to me is 75,000. The excess limit which was brought into India suffers duty. So what is the percentage of duty which I need to pay? Earlier it was 20% for the imports which are being made. Now the duty has been reduced to 10%, which means if I'm bringing back 80,000 worth of goods, I have to pay 10% duty only on the excess allowances. Means only on 5,000 I have to pay 10% duty, not on the entire 75,000. So this is the welcome move which was brought in to these rules. And as I said earlier, forms are being notified. CBD 1 for baggage rules and CBD 2 for unaccompanied baggage and CBD 2 for unaccompanied baggage, and temporary detection for release of re-export, which is your certificate, which will be issued in CBD 3 and CBD 4. So these are all the changes which was brought in the baggage rules 2026. So now let us see the difference between the earlier rules and the new rules. Earlier, as I said before, the duty-free allowance was limited up to 50,000. Now it is changed to 75,000. And for foreign tourists, earlier it was 15,000. Now it is changed to 25,000. And this one new laptop, earlier it was included in the general limit of 50,000. But now it has been excluded. So you can carry one new laptop plus 75,000 worth of goods. With respect to jewelry, the value cap has been removed. With respect to declaration, previously it was a paper declaration. Now it has been made electronic, where the declaration can be made in case of CBD 1 through Aditi or in case of CBD 2 to iSkate. This is with respect to declaration. And with respect to temporary imports and exports, which is the goods which are brought in by the foreigners and the goods which are brought in by the residents and the persons of Indian origin. Previously, there is no procedure regarding the temporary imports. Now the procedure has been given by way of notification. So any persons who are leaving from India or coming outside country, they can declare their belongings and they can get the certificate. Based on the certificate, they can re-import or re-export the articles. And the personal duty and the duty for the imported goods are reduced from 20% to 10%. So these are all the major changes which was brought in. with respect to the customs baggage rules. Yes. So earlier there was no provision made to crew members to import or to bring back the goods into the country. So now the value cap has been fixed to 2,500. So now the crew members can import duty free of goods up to the worth of 2,500 with respect to their cosmetic, chocolates and other articles. Yes. So there was a provision in the earlier rules for transfer of residence. In case of transfer of residence, for example, if any residents or Indian persons of Indian origin who was employed abroad and after his termination is returning back to India, there are certain transfer of residence allowance which was given to them. Earlier, there was only one appendix which was applicable for both residents or persons of Indian origin as well as foreigners. Now, there are two appendix being issued. One Appendix 1 speaks about the allowances which are applicable for the residents of tourists of Indian origin, and Appendix 2 for the foreigner with a valid visa, which is other than tourist visa. So in case if a resident of tourist of Indian origin who was employed outside India and if is coming back to India after his termination, he can bring back the goods to India worth the allowances will be depend on the duration of the stay abroad. So if the person has stayed in abroad for the period of 3 to 12 months, he can bring back the goods worth 1,50,000. If the stay is more than 1 year, 1 to 2 years, he can bring back the goods worth 3 lakh as a duty free. If it is more than 2 years, he can bring back the goods worth 7,50,000. Earlier, it was 60,000, 1 lakh and 5 lakh. Now, the value has been amended. So if any person who is staying abroad after his termination of his contract, if he comes to India, he can bring back the goods based on his duration without any duty. The list of goods has been specified in Annexure 2. Previously there was 3 annexure, Annexure 1, Annexure 2 and Annexure 3. Annexure 1 and Annexure 2 speaks about the goods which are prohibited to be imported into India. And Annexure 3 speaks about the goods which can be carried by the resident individuals during their transfer of residence to India. Now, there are only two annexures, Annexure 1 and Annexure 2. Annexure 1 speaks about the goods which you cannot bring back to India, and Annexure 2 speaks about the goods which you can bring back to India based on the duration of your stay abroad. So with respect to Appendix 1, it is 1,50,000. If this duration is 3 to 12 months, it is 3 lakh if the duration is 1 to 2 years, and if it is 7,50,000 if the duration is more than 2 years. With respect to the foreigner, the allowances, if the duration is from 6, for example, if the foreigner was coming to India for the purpose of employment, and now if he is leaving abroad after his termination, so he can carry goods up to the value of 1,50,000 duty free if he stayed in India for a period of 6 to 12 months. If he stayed for a period of 1 to 2 years, he can take back the goods worth of 3 lakh duty free. If he stays is more than 2 years, he can take back the goods worth 7,50,000. If it is more than 2 years, the same 7,50,000 will be applicable. This is with respect to the transfer of residents or tourists of Indian origin and foreigner with a valid visa other than work visa. And with regards to the penalty and appeal mechanism, there is no changes. In case if any goods are brought in without paying any duty, the penalty will be the 5 times of the duty. For example, if the declaration is not made, without making a declaration when entering into the immigration and when entering into the green channel, then the duties of the goods which are not declared will be liable for the penalty of 5 times. The appeal mechanism is same. There is no changes in that. So let us see the scenarios. For example, in case if an NRI is returning with electronics, 80,000 in personal goods plus one new laptop, the duty will be charged on the excess duty-free allowance, which is 5,000. 80,000 minus 75,000, which is 5,000. The BCD will be charged on the excess duty-free and the excess allowance. So the excess value of the goods which was brought in by the NRA. So it will be 5,000 and the customs duties will be 10%. From earlier 20%, now it has been reduced to 10%, it will be 500. If such declaration is not made, then the value of the penalty will be 5 times of the duty, which will be 500 into 5. This is with respect to scenario 1. With respect to scenario 2, foreign tourist with gift. If any foreign tourist who is living outside India carrying the goods worth of 30,000, the limit to the foreign tourist is only 25,000. So the excess 5,000 shall be liable for the duty. Jewelry misdeclaration. So if there is any misdeclaration in the jewelry which you are taking outside the country, there will be a penalty imposed which is 5 times the duty of undeclared quantity plus duty itself. This is with respect to jewelry misdeclaration. And scenario 4 covers the exports of electronics in baggage, temporary exports of electronics in baggage. For example, I am visiting abroad. I am taking a camera with me. I have to declare it to the authorities and I have to obtain a certificate, which is a temporary certificate, which will be issued in CBD 4. And when I'm returning back to India, I can show that certificate and I can re-import the camera which I took with me without any duty. This is scenario 4. So these are the changes which was brought in by way of Customs Act. Totally 9 notifications and 4 circulars. 5 with respect to tariff and 4 with respect to baggage rules and other amendments. With regard to tariff rate, I humbly request people to check on the previous notification because notification 2/2026 refers entirely to the previous notification which was issued. The previous notification is 45/2025.
Sham Sundar,
Yes,
we
sir.
are going to have a separate session only on rate changes in customs.
Okay, sir.
So we'll have that. There are about 150 plus
Yes, sir.
amendments have been there.
Amendments have been-
More than 150. More than 150 amendments
Yes.
have been made in the rate notification. So be that as it may, we are going to have a separate exclusive 2-hour session only to discuss that. Not
Okay,
that
sir.
customs is not, but customs is important considering the fact that any increase or decrease in the rate of customs duties affects the final price of the commodity,
Mm.
especially there are raw materials. You know, India is a net importer. India being the net
Yes.
importer, our thoughts on customs are also very extremely important. We'll have that. Okay. Thank
Sure,
you.
sir. Okay, sir. So with this, I end my session. Thank you, ICI, for giving me this opportunity. And thank you, Rajendra Kumar, sir, for giving me this opportunity. So now I'll hand over the session to Bimal sir to continue further. If any questions, we can have after the session completed.
Yeah, thank you, Sham Sundar. Only thing
Thank
is
you,
just
sir.
before Bimal sir speaks, I would like to apologize to both of you because I was not there in the opening and I was in an aircraft. So once I landed, I thought, like all of you are busy, I'm also busy in so many things. Of course, you are busy in profession. I'm busy in the institute-related matters. So, esteemed friends, that this was a very thoughtful session by C.A. Sham Sundar. In fact, the baggage rules, whatever amendments have been made, are extremely minuscule, I would say. Hardly $20-30 difference. And these amendments which have been made are in principally to correct the difference of price increase on dollar, euro, and such other. Because I remember these baggage rules were there in the same form maybe 5, 6, 7 years before, hardly when the dollar was 60 rupees or 70 rupees. And today all of you know where the dollar is. And when euro was ruling some 75, 80, and today euro has crossed 100, and many other such foreign related exchanges have gone beyond scale. In fact, look at country like Malaysia. But Malaysia, I remember the ringgit was hardly 12 rupees or so. That was the ringgit value about 10 years or 15 years before. Today, the ringgit is 60 plus. 60 rupees ringgit is almost 50 plus. So these are values which are extremely important. And thank you for highlighting all these factors. GST coming to Bimal Jain. Bimal Jain needs no introduction. Bimal Jain needs absolutely no introduction. It will be a waste of time for me to introduce Bimal Jain. And I'll be only eating away the time which the participants will be scolding me. Why is he introducing Bimal Jain? As if we don't know him. Who is he to introduce Bimal Jain and all those stuff? So, friends, you know GST, every GST council meeting is a budget. And whatever, now there is no secrecy in the budget as far as GST is concerned. Because any amendment in GST has to have the prior approval of the GST council, rather recommendation. They use the word recommendation of the GST council per se. And only once the GST council recommends, the matter comes here. And the day GST council meeting ends, on the evening, the government comes up with a press release. Everything is there in black and white before all of us. So certain amendments have been made to intricately discuss these amendments. We have Bimal Jain here. Bimal Jain was there present in the WOFA session when we had Indian budget, where very time was very, very less. On the very same day, sitting on the dais, we discussed with each other. We finalized the time of this meeting also. We finalized the date of this meeting also. And immediately, this was discussed with the secretary of the committee, Smita Mishra, who was very courteous enough to start the proceedings, block the date, block the time, and everything, and also create a link. And there we are today with Bimal Jain on the screen with almost 1,500 participants today, Bimal Ji, who are watching us from across the country. So, yes, we have not, we are very glad to have you again in the GST Indirect Taxes Committee webinar. Welcome to you, and over to you, sir. Thank you.
Thank you, Rajendra sir, that we all are now contributing under the chairmanship of Rajendra Kumar sir. So this webinar which we are doing, yes, he rightly said, on 1st of February we decided, and 3rd of February we are doing this webinar. So all appreciation goes to Chairman Rajendra sir, Secretary Smita ma'am, and to all ladies and gentlemen, professional colleagues, Pan-India joining today, good evening to all of you. So without taking much time, let me start important changes made in GST. Let me start with the background. Whatever changes you are finding in Finance Bill 2026 pertaining to GST, it is all in furtherance of next generation GST 2.0, which got introduced from 22nd of September 2025. You must be recalling 56th GST Council meeting. And this 56th GST Council meeting was done on 3rd of September 25. And it was on the premise of this next generation GST 2.0. Honorable Prime Minister on 15th August 25 announced three important parameters for this next generation 2.0. First, structural reform. Structural reform pertaining to providing clarity and certainty for classification. Classification disputes should be minimized. That is the first structural reform. And under structural reform, he talked about that whatever in a sector having inverted duty structure, that should be minimized. Second important point was rate rationalization. We all know that GST rate now change as per the recommendation of GST Council. So it has not happened through union budget. It is all part and parcel when GST Council is making recommendation and notification is issued in this regard. So mainly four rate, 5%, 12%, 18%, and 28% with compensation cess. Now it is being rationalized. Is now 5%, 18%, and 40% with no compensation cess. Third important one, ease of doing business in GST. Under ease of doing business in GST, what are the important steps taken and recommended? First, registration within 3 working days for all small taxpayer whose monthly liability is less than 2.5 lakh rupees. And this scheme has initiated from 1st November 25 by insertion of Rule 14A. And they talked about simplified registration scheme for small supplier who are supplying through e-commerce operator. So they may be supplying in a different state. So what happened for their registration? Are they supposed to take separate registration? Are they supposed to declare principal place of business in respective state? It is very cumbersome. So simplified registration scheme was announced and recommended for all such small supplier supplying through e-commerce operator. And most importantly, 90% provisional refund within 7 working days. As it is available for the zero rated supply, it would be made available for any sector suffering from inverted duty structure. So these were the basic background. When we have seen next generation GST 2.0 implemented from 22nd September 2025, now we comes to Union Budget 2026. In the economic survey, Honorable Finance Minister talked about that now GST collection is getting stabilized. On an average, you must be knowing we started with 89,000 crore rupees per month. Now we are ranging around 2 lakh crore rupees per month. So it is getting stabilized. She talked about that year-on-year growth. April to December 25, it is 6.7%. So GST collection year on year, taking duration of April to December 25 is 6.7%, and our GDP economy, India GDP growing by more than 7%. So in terms of growth, 7% plus, GST is also growing and it is 6.7%. She talked about that registration, taxation base under GST has increased from 65 lakh to 1.5 crore. So this next generation GST 2.0 has given momentum for consumption, local consumption, and it was used to fight back with the US tariff. Now, welcome announcement yesterday that now US tariff going to be 18%. So that's a different point. But the time when this was announced, next generation GST 2.0, it was on the vision of boosting local demand. And that is how we have seen after Navratra and Diwali, collection has gone up, even though rate were reduced for many items. So this was the background. In that background economic survey, another part they are talking about, now they will bring revolution in the eBay bill. That is what being stated by Honorable Finance Minister in economic survey. They want to change perspective of eBay bill. It will not be used as an enforcement tool. It will be used towards logistic enabler so that the movement becomes easier, seamless. So that announcement may be way forward. Next GST Council meeting, something new will come up when you look at the changes pertaining to eBay bill generation for movement of goods. Having said, Union Budget 2026, which is presented on 1st of February 26. What are the relevant clauses which is referring to GST changes? And these GST changes are nothing but in furtherance of whatever recommendation made by GST Council in 56th GST Council meeting held on 3rd of September 2025. So what are the clauses? Relevant one, clause number 137 to clause number 141 of Finance Bill 2026 is the relevant one for the changes in GST as per recommendation of GST Council in the 56th meeting. So we are going to discuss each of the change one after another, but union budget. Let me tell you the background, how we are heading for India. India is a growth story. Yes, this budget is on long-term perspective, growth oriented, future vision is being provided, and that is how we are targeting GDP growth of more than 7% plus. 7% plus. If you look at fiscal deficit, while comparing total revenue and total expenditure, total revenue which is being considered for budget of 26-27 is 36 lakh crore rupees, whereas total expenditure for the budget is 53.47 lakh crore rupees and containing the deficit by 4.3%. So this fiscal deficit since 2021, it is going down and contended. So this is good. Debt to GDP ratio is also coming down, meaning thereby our money would be made available for the growth. That is how capital outlay plan as against 11.11 lakh crore rupees, it is now 12.27 lakh crore rupees for this union budget 26-27. So capital outlay of 12.22 lakh crore rupees is a very good number when you look at capital expenditure, growth for infrastructure, road, railway, aviation, anything public facilities, it is all going to be developed and give a boost to all of us together. 7% plus GDP growth. Having said that, now come to GST changes one by one. I'm not giving PowerPoint, but definitely I will make it very comfortable to my all the participants. I only want your attention. Hopefully you're listening to me carefully. The first one, the first change. From IGST Act perspective, term intermediary going to be omitted. This is one line. You can read the tagline as intermediary is going to be omitted. Place of supply provision for intermediary, which is location of supplier, going to be omitted. But to understand what is the implication, we need to understand in a practical way. Let me create example for you and then we will take it further. Let's say I'm registered in Delhi, Bimal Jain registered in Delhi, and Bimal Jain is approached by Australian University. What Australian University wants from Bimal Jain? That I must promote their courses in India. I must, communicate through roadshow, through conferences, through seminar to Indian student that Australian University is providing so and so courses. So Bimal Jain going to undertake these activities, these services with the privity of contract with Australian University. So I'm doing this promotion, marketing, counseling services in India at the behest of Australian University. having a contract with Australian university, and once a student, let's say I'm doing for 1 lakh student, but only 1,000 students are taking admission in Australian university. So I'm being paid a percentage by whatever name called, which is called commission, brokerage, whatever. So only on successful 1,000 student taking admission in Australian university. So I'm raising invoice to Australian university in convertible foreign exchange. I'm being paid in convertible foreign exchange. Question was whether my services, which I'm posting to all of you, and you can apply your mind. Bimal Jain registered in India, supplier located in India, providing services to a service recipient, Australian university outside India. Whether it is export of services. This is what, if it is export of services, then GST should not be charged. For zero rated supply, we all know that whatever tax component comes, we get the refund back. But first we have to determine whether it is export of services. So what are the conditions need to be satisfied for export of services? Under section 2, subsection 6 of IGST Act, 5 conditions. What are those 5 conditions? First, supplier must be located in India. Bimal Jain, registered in Delhi, located in India. Service recipient must be outside India. Who is service recipient? Australian university, outside India. No problem per se. And privity of contract with Australian university. These student, Indian student may be beneficiary, but I am having no contract with the Indian student. Whatever performance service I'm performing in India, it is because of privity of contract with Australian university. So services are being given to Australian university. Services are being consumed by Australian university. Second condition satisfied. Third, supplier must get this money in convertible foreign exchange, which I'm getting. So Australian university on my invoice paying in convertible foreign exchange. 3 conditions satisfied. 4, supplier and recipient should not be related, should not be a merely establishment of distinct person. So we are not establishment of each other. Satisfied. 5th condition is the interesting one. For that, this change is important. For export, place of supply should be outside India. If it is outside India, then only I can say it is export of services. But to why it was under dispute and why it is being litigated? For simple reason, place of supply for intermediary Bimal Jain, its location of supplier, which is Delhi. So it is not outside India. Hence, GST leviable. This was the dispute and litigation. Having said that, why they are treating me as an intermediary? You'd be thinking, why? So intermediary definition is being provided under section 2, subsection 13 of IGST Act. What is the definition? Intermediary means any broker or agent or any other person who is facilitating or arranging supply of goods or services or both between 2 or more person, and when this intermediary is not providing services on its own account, So what department is saying, Mr. Jain, you are only intermediary. You are arranging and facilitating. Let me tell you, I got a case with DGGI. DGGI has created a case, similar factual position which I'm referring to. And they said, Mr. Jain, you are intermediary, hence GST need to be charged. Now, irony is I said to the DGGI authority, and this was one of the representation of Indirect Tax Committee of ICAI, that Bimal Jain is not broker or agent. Whatever Bimal Jain is doing, Bimal Jain is doing his service on his own behalf. It is his principal service. Privity of contract with the Australian University. Services are being received and consumed by Australian University. It is my own account. That is my excellency capability which I'm performing. As per the contract with Australian University, it should be my own account. I'm not broker or agent. No. It is not facilitation or arranging. It is my main service which is being provided to the Australian University. So it should be export of services. That is what we all were arguing. We have represented this subject matter before CBIC and GST Council, Indirect Tax Committee of ICAI, under chairmanship of Rajendra sir. We said it is principle to principle basis. There is no agency. So it should be export of services. To remind you and to tell you that a recent judgment from Delhi High Court, relying different other High Court judgment in the Global Opportunities Limited, similar pari-materia factuals, counseling services provided to the Indian student on behalf of the foreign university, having contract with the foreign university, paid in convertible foreign exchange. Delhi High Court has relied number of judgment, Vodafone, Ernst and Young, and said it is export of services. It can't be intermediary. It can't be intermediary. And that was a judgment given by Delhi High Court. When Revenue has filed SLP against this judgment of Delhi High Court, it was dismissed. Honorable Supreme Court was not inclined to interfere. Of course, nothing was discussed on merit, but their SLP got dismissed. Not only one judgment, it has referred Vodafone India, it has referred ENY, and I'm just citing you that the judgment has given settled jurisprudence that this is principal service on his own account. It cannot be intermediary. Another thing which I argued before DGGI authority, it would be more interesting for all of you to understand. I argued before DGGI, I said, sir, Amitabh Bachchan and Shahrukh Khan is doing a promotional activity. They are coming for the advertisement, right? For the different foreign, let's say Hindustan Unilever Limited. Their product are being advertised by these two actors. There may be so many actors. So whether this is intermediary. So this advertisement goes to mass population. So they might be purchasing the product or might not be purchasing the product. Similar the case, I did my services to 1 lakh student, only 1,000 student has taken admission and I'm being paid on the basis of 1,000 student. So I said they all are providing their service on principle to principle basis. There's no concept of any broker or agent, no facilitation or arranging. It is main service on my account. So I'm providing service. I'm not a broker. So that case I discussed with DGGI, and in past they were understanding that this issue has got something to look at from interpretation perspective. But irony in GST, even though on interpretation we are a bona fide department, always try to invoke 74, fraud, willful misstatement, suppression of fact. And I said that when you want to invoke any arrest provision under section 69 red bit 132 of CGST Act, you need to ensure there is mens rea. On classification dispute, you can't say that classification dispute can be on mens rea perspective. And there is specific instruction, I'm telling you, 5/2023, 13 December 2023. You can note down this instruction which will help you, clearly saying that department should not do mechanically. They should not invoke fraud. willful misstatement, suppression of fact on a mechanical manner. They have to look at what is the dispute all about. But we are all getting favorable judgment. But here I would like to tell you that this place of supply provision under section 13 subsection 8 clause B of IGST Act was picked up from service tax regime, copy pasted. Under service tax from 1st October 2014, they had said place of supply would be location of supplier. And it was copy pasted in GST regime and disputed since GST till as on date. And they're saying it is not export, 18% leviable. An Australian university coming back to me and telling me, Bimalji, we are less bothered. What we will do with 18%? There's no double tax avoidance agreement. And all business perspective from this transaction which I referred to was moving out of India, Dubai, Nepal, Bangladesh, Sri Lanka, and we were losing out. We are getting convertible foreign exchange, but they are saying it is not export. GST leviable made it incompetitive. Incompetitive. Now, let me draw another reference so that you can get a clarity and you can just apply your mind. This is a case when services are being provided from India to outside India. Let's reverse the case. Let's reverse the case. Now, any Indian university is approaching to a foreign resident, let's say Korean resident, Mr. I.H. Kim. He belongs, he is a Korean guy. So Indian university, any university can say they have approached Mr. I.H. Kim of Korea and requested same thing that you do all, counseling, promotion for our Indian university in Korea to get the Korean student admitted in India university. Clear? I just reverse the transaction so that you can apply in a better way. Now, in this case, on successful admission, Indian university is paying money to the supplier of service, Mr. I.H. Kim, located in Korea. It's a case of import of services. I will give you the answer, but let me check and you try. I hope you all are listening to me carefully. Is it import of services? First question. And second, if it is import of services with a reverse charge in the hands of Indian university would be applicable for payment of GST? Two questions. So apply yourself with the reverse charge, GST need to be paid by this Indian university on the services received from a supplier, I.H. Kim, located outside India. Just apply your mind. You can write yes, no in that question answers tab. At least I get a clarity that you applied yourself. When at the end of the session, when I will start, I will see whether you have applied yourself or not. For import of services, three conditions need to be satisfied under section 2 subsection 11 of IGST Act. What are these three conditions? Supplier located outside India. Yes, IH Kim in Korea. Recipient must be in India, Indian university in India. And third one, place of supply should be in India for import of services for reverse charge applicability. But when you consider Mr. I.H. Kim as an intermediary, hypothetically, then place of supply for intermediary was location of supplier, which is not India. Hence, reverse charge is not applicable. RCM not applicable. Look at the irony of government policy. When my convertible foreign exchange going out of India, Indian university giving to Mr. I.H. Kim, no reverse charge. But when it is export, I'm getting convertible foreign exchange because Australian university giving it to me, it is not export of services. Different parameter, different way to look at the transaction, different parity altogether. And we all represented this subject matter before GST Council. So what is being done and recommended? as per recommendation of 56 GST Council meeting, it is now being said this section 13 subsection 8 clause B of IGST Act going to be omitted. So omitted means now this is going to be as per default rule or provision under section 13 subsection 2 of IGST Act, which is location of recipient, which is location of recipient. That's what we are looking for. So the same transaction which I referred, apply yourself. Now it would be export of services because all 5 conditions are satisfied. Bimaljan registered in India, supplier, Australian university outside India, paid in convertible foreign exchange. We are not merely establishment of distinct person, and now place of supply, which was earlier location of supplier omitted, now it be location of recipient outside India. Hence, it is export of services. Welcome move, welcome recommendation, and welcome amendment. But now here. You'd be asking this question to me, Bimalji, whether this provision is a prospective one or retrospectively applicable from July 1, 2017. That would be your question, right? When you read the Finance Bill 2026, there is no reference of any retrospective applicability. So in a manner, when we read it, it is prospectively applicable as and when these clauses of Finance Bill 2026 gets notified. So from a date perspective. But question comes, why you're doing prospective? It was export. And that's what the judgment coming from different high court, Vodafone, ENY. I said global opportunities of Delhi High Court, revenue filed the SLP in Supreme Court got dismissed. All subtle jurisprudence is saying it is not intermediary. You could have done with a retrospective date, means I'm telling them. You could have done retrospectively to done away all litigation pending on this point, An actual benefit must be passed on to the service provider export community in India whenever they are offering services to a foreign recipient outside India. GST is a consumption-based destination tax. It should be export of services. Am I right? But this is the point which is not being done. But to my mind, you can always litigate the matter in case it is disputed by the department. And all subtle jurisprudence are coming into your favor. And being they are omitting this provision 13(8)(b) of IGST Act, clearly hinting it is clarificatory in nature. Hence, be applied with a retrospective date. So this is my submission on intermediary, but I would take one, sometime I want to do interactive part. So I just want to check from each one of you whether you got it right or wrong. Import of services. When I given the example, prior to this omission, I said no reverse charge applicable. But with this change of 13 subsection 8 clause B of IGST Act, with a reverse charge going to be applicable? You can write down the answer in that question sheet which you got it, so that I can run through, yes, you have applied your mind. It would be now reverse charge applicable. Supplier IHKIM outside India, Indian university in India, and place of supply must be in India, which is location of recipient, India. Reverse charge applicable, which was not there prior to, before omission. So this is how the change pertaining to intermediary. So this is point number 1. Coming back to point number 2. Post-supply discount or incentive. I'm sure you're watching me. I'm sure you're paying attention to me. See, in an extempore presentation, what is important that you are paying attention whatever I'm talking to you. And even I'm trying my best to draw the practical example, the practical way to look at the provision. So hope you all are with me, and your participation will make actually Sabka Saath, Sabka Vikas. So let's participate on second important point. There's a post-supply discount or incentive. Credit note. See, in GST applicable on transaction value. GST is not applicable on MRP. I'm taking one example and taking it further so that you can understand. Let's say I'm selling a laptop for 1 lakh rupees. MRP written 1 lakh rupees. I'm giving you discount of 10,000 rupees at the time of supply. It is 90,000 which I'm taking from you. So GST applicable on 90,000, not on 1 lakh rupees. So not on MRP, but on transaction value. This is at the time of supply, so no dispute. Dispute lies only when there is any post-supply discount or incentive. And this is the trade practice in the local commercial parlance that supplier always pass on benefit, discount or incentive to the buyer on premise of quantity pickup, volume discount, payment terms, cash discount, or any other milestone. But this is all happening post-supply. So post-supply, when any discount or incentive is being given, supplier is issuing a credit note under GST to the recipient, to the buyer. Now, when supplier is raising credit note, how this transaction is being done? Let me take example so that you can understand. Let's say initially I sold the product for 100 rupees. 18% was the GST rate. I charge 18 rupees GST, IGST to you. You as a buyer taken the credit of 18 rupees. Now, when I need to pass on any incentive or post-supply discount on the basis of milestone achieved, then I need to raise credit note, right? Supplier need to raise credit note. So I'm raising credit note of, let's say, 10 rupees and applying 18% GST. So 1.8 is the IGST component. What happened? This 1.8 supplier will get adjustment. Supplier, Bimal Jain, will get the adjustment with his output tax liability. And correspondingly, you need to reverse ITC of 1.8. But there were two more conditions. So three conditions need to be satisfied for issuance of credit note under GST. When you look at section 15 subsection 3 clause B of CGST Act, what are these three conditions? Listen carefully. There has to be agreement between supplier and recipient to be executed on or before supply is being made. Now, my first observation and our representation to the GST Council was, sir, this quantity pickup, volume discount, or cash discount are after effect. And sometimes we are not getting into agreement. It may be oral agreement. But having agreement on or before supply is not as per real market condition. So this agreement reference need to be omitted. Second condition was that my credit note will have linkage with the invoices raised. So when I'm issuing credit note as a supplier, it should have a linkage of all the invoices which I've issued in the past. How come it is doable? There are 100 invoices for which I'm issuing only one consolidated credit note. How come linkage? It was not doable in the past and we were struggling with. So these 2 points we have represented to GST Council. Unfortunate part which is being done in this union budget 26, we are saying 2026, they have omitted the condition of having agreement and linkage with the invoices. Well done, welcome steps. Last condition was that to the extent of 1.80, supplier is taking adjustment while issuing credit note with its output tax liability, recipient need to reverse ITC as per section 34 of CGST Act. So that condition remain intact. So no problem. But here two more observation. First observation. For the past period, supplier was getting so-called notice from GST department that you prove your recipient has reversed ITC. Supplier was getting, then only you will get the adjustment. It was very difficult for supplier to prove whether recipient has reversed ITC or not. First. And second, there was no window, no mechanism available also, whereby supplier can cross-check whether recipient has reversed ITC or not. So you must be recalling one circular number 212, dated 26 June 2024. You must take a note of it. It came out, and for the past period, they have provided a mechanism. They said, Mr. Jain, supplier, if tax component on credit note is more than 5 lakh rupees and you want to take adjustment in the hands of supplier, then you must take a certificate of practicing chartered accountant or cost accountant of recipient, endorsing that he has reversed ITC. If that certificate is being issued to the supplier, then supplier can take adjustment with his output tax liability. If amount of tax component on credit note is less than 5 lakh, then it is certificate of recipient will work. That was the circular 212. Now you all know that now this mechanism, credit note issued by the supplier, he want to take adjustment and correspondingly recipient must reverse ITC. It is all happening through a portal. GSTN portal all got started. You know IMS, Invoice Management System. So invoice management system has given window that supplier will raise credit note, issue credit note, which is available to the recipient on their IMS dashboard. Recipient can either accept or reject. Accepting means supplier will get the adjustment and recipient credit will get auto reverse mechanically. So reject means you're not accepting. Then in that case, supplier will not get adjustment. And this credit note can be kept pending only for one tax period. So your choice is only for one tax period, you can keep it pending on IMS dashboard. So this is now getting automated. So if it is being accepted, quite obvious, supplier will get adjustment with his output tax liability and recipient credit get automatically reversed. So all happening through a portal. So what is the relevance of circular number 212? They said now no relevance of 212. So they have omitted. They have taken back their own circular number 212 by circular number 253 dated 1st October 2025. So they have taken back. They have said now this 212 is not applicable. Withdrawn. So here question will come. If it is being taken away, does it mean that for the past period, we can't take the benefit of CA and CMA certificate? Yes, you can take for the past period. But way forward, it is all automated through IMS dashboard. So this is one part. And with respect to certain issues on post-supply discount or incentive, they have issued another circular number 251, dated 12th of September 2025. Listen very carefully. The three issues in this circular, they have clarified. It might be of great help to you. Listen very carefully. And I'm sure you're watching me. You're watching and listening both carefully. Listen very carefully. In GST, credit note to be issued by a specified date, which is 30th November of succeeding financial year for a relevant financial year. But sometime we have seen that time period is passed by. Still, we need to pass on the benefit to the buyer. Can we issue financial or commercial credit note without GST? So supplier will not charge any GST, will not take any adjustment with his output tax liability, and it is going to you, to the recipient. Do you require to reverse ITC when supplier is not taking any adjustment of GST component, being financial or commercial credit note? Possible or not possible? You have to just apply yourself. And this circular number 251 clearly saying that you can issue a financial or commercial credit note, no problem. But why department used to dispute, I'm telling you the background, what department used to allege. Department used to say that recipient has paid only 90 rupees, 10 rupees adjustment credit note has not been paid by them. So recipient fails to pay 10 rupees. So he need to reverse. But on financial credit note, commercial credit note, this was the representation. So they have said now recipient need not require to reverse ITC. So two problems solved. Can he issue financial or commercial credit note? Doable. Do recipient need to reverse ITC? Need not required. But this is with the circular number 251 dated 12th of September 2025. Now coming to the another issue in the same circular. When supplier is giving credit note on post-supply discount or incentive, we have seen the department used to dispute and allege that whatever credit note amount given to the recipient or buyer, it is towards some services has been given by recipient to the supplier. That's what department used to issue so-called notices. And they used to allege as if recipient are being paid for their provision of services, whereas it was towards post-supply discount or incentive. So what this circular is clarifying on this point, they are saying now rest assured, if it is pertaining to your original supply, this incentive or discount post supply has got no reference of any provision of services from recipient to the supplier, then it will not be alleged. It will not be alleged that recipient has provided any services to the supplier. But if recipient is getting credit note because of some promotional services undertaken by them and on behalf of the supplier, then that is considered as a provision of service and GST leviable. So your contract is important. You need to carefully draft your contract and capture this transaction so that tomorrow dispute should not come up. Point number three, the last one in this particular circular. In post-supply discount or incentive, let's say I'm a manufacturer. Let's assume I'm a manufacturer. You are my dealer or distributor, and there's an end customer. I have agreed with my end customer that I will sell you at 90,000 rupees. There's the agreement between manufacturer and end customer. I will sell you at a 90,000 rupees. But I have supplied you, dealer distributor, to whom I supplied for 1 lakh rupees. So when dealer distributor supplying to the end customer, I'm asking my dealer distributor to charge 90,000. Whereas you purchase at 1 lakh rupees, then you would be saying, Bimalji, how come? My costing is 1 lakh rupees. So I say that I will give you credit note, 10,000 rupees. So 90,000 given by the end customer, 10,000 given by supplier, manufacturer to the dealer and distributor. So what is the value? Whether it is consideration 10,000 rupees for the credit note component issued by manufacturer to the dealer and distributor. Having agreement with the end customer. When agreement is there, then it will be part of consideration. And consideration can be paid by the recipient or any other person. When agreement is there, then it's a consideration. But when there is no agreement, then it's an independent transaction of dealer and distributor with the end customer. Then nothing, no problem. Having agreement between manufacturer and end customer, it is consideration. Otherwise, it's not consideration. It is considered independent transaction of dealer and distributor to the end customer. It is through a circular number 251 dated 12th of September 2025. So what happened in Union budget? They have omitted agreement provision. They have omitted linkage with the invoice, and they have only kept recipient need to reverse ITC, and with reference to the past period, they have taken away circular number 212. It is now getting automated, and certain issues where dispute lies, they have clarified by circular number 251. So this becomes holistic. Sometime when we discuss, and we all are saying that GST, there is no much changes, right? That's what I'm hearing in the market. But when we look at the transaction and read the transaction in a holistic manner with practical example, then only we understand what is the ramification. To what extent these changes are affecting our regular supply chain transaction. So this was the second one. Third one. See, for zero rated supply, what are zero rated transaction? To export and supply to SEZ unit or developer. There is a specific provision of provisional refund under section 54 subsection 6 of IGST Act. Specific provision. And a provisional refund is being given within 7 days, 7 working days. Now, what is the amendment made in this Finance Bill 2026? They have said, and they have added reference of inverted duty structure in this provisional refund provision, wherein 90% refund is being given within 7 working days. So zero rated plus IDS, inverted duty structure. What is inverted duty structure? When rate on input, say 18%, is higher comparing the rate on output 5%, then you will have accumulation, right? So that is called inverted duty structure. And under inverted duty structure, you get refund only on input. No input service, no capital goods. You must be recalling BKC footstep Supreme Court judgment. And that judgment went up to Supreme Court, having divergent judgment coming from Gujarat High Court and the Madras High Court. And dispute was whether under inverted duty structure, refund of input and input services can be given. Honorable Supreme Court has said, reading the provision of 54 subsection 3, only input, no input service, no capital goods. So they have said provisional refund provision, which was applicable for zero rated supply, is made applicable to IDS also. Within 7 working days, 90% provisional refund on the basis of risk-based identification and evaluation by the system. So if you are a non-risky taxpayer, supplier, then you will get 90% provisional refund within 7 working days. It is so soothing to our ears, so sweet. Practically what we have seen in the trade, refund are not coming on time. Very difficult. For number of either or region, our refund is being held back. I do not know. I'm just sharing this part. And they said this IDS refund within 7 working days, 90% made applicable from 1st November 2025. 1st November 2025. Even I heard that some of the CGST department is doing the activity, but the SGST department is not releasing. those who are jurisdictional SGST authority, they are not releasing this provisional refund on IDS. First challenge. Second challenge. They have amended Rule 91 sub Rule 2. They have amended Rule 91 sub Rule 2. Under this rule, they have said that you will get provisional refund within 7 working days, but from date of acknowledgement. What challenge we are facing, even date of acknowledgement, the ARN which is issued by GST department is delayed 15 days, 20 days, 30 days with no accountability. And they're saying this 7 days would be calculated from date of acknowledgement. Challenge 1. Challenge 2. A veto power given under a proviso under this Rule 91 sub Rule 2 stating that if proper officer is not satisfied with the system-based report coming out, he may hold back your refund and go for detailed scrutiny. So he will override. Of course, region to be recorded in writing. Region to be recorded in writing. Let it be. But we have seen these are practical problem we are facing day in, day out. If you're holding back the working capital, not releasing on time, it is not easing business. Of course, in letter and in spirit, it sounds good, provided implemented. Provided implemented. That's what we all are looking for, isn't it? But having said, I would like to connect one more point with this particular topic. Next generation GST 2.0, they have said they want to minimize inverted duty structure scenario. Even for custom proposal in Union budget, Honorable Finance Minister said she is rationalizing and simplifying custom duty rate, adding more value for domestic manufacturing, and want to done away with the inverted scenario. And that's what the structural reform they have referred in press release on the verge of next generation GST 2.0, but I've seen that certain sector with this rate rationalization are facing inverted duty structure scenario. The prominent one, packaging industry. Paper is the raw material and corrugated and non-corrugated paper boxes are the output. Paper was 12% and this packaging product was 12% prior to 22nd September 2025. What happened, you know? Paper rate increased from 12 to 18% and packaging, corrugated boxes and non-corrugated boxes, which was 12%, reduced to 5%. Inverted duty structure. And they do not know how to go for refund and whether they will get refund in a time-bound manner, though stated to be 7 days. This is one of the example I'm sharing with you. There may be other sector which you may find that rate rationalization has created some kind of inverted duty structure. But summary would be whatever recommended and stated towards ease of doing business must be implemented in letter and spirit if at all we want to give ease of doing business. So this was on provisional refund. There's specific provision 54 subsection 14. And there's a reference of 1,000 rupees that beyond 1,000 rupees you can't go for export of goods with payment of taxes. They have taken away this restriction. So for those who are exporting through courier, postal, less than 1,000 rupees with payment of taxes, they can go for refund. So this barrier is being taken away. So welcome steps. I can say welcome step. One more change in the Union Budget 2026 pertaining to all appeal before National Appellate Authority for Advanced Ruling, which is not yet formed. So it will go to a designated authority and or tribunal. So tribunal, as we understand, it will go to GST-80. That is what they have said and stated. So this is another change in Union Budget 2026. Last and foremost. Last and foremost. One of the recommendation was that simplified registration scheme. All small taxpayer having monthly liability of less than 2.5 lakh rupees, they are being given granted registration as per Rule 14A within 3 working days. Welcome steps. But small suppliers supplying through e-commerce operator, pan-India. So they were facing a challenge. Do I require, because I'm registered in Delhi, my principal place of business in Delhi, but of course I'm supplying goods through e-commerce operator in a different state. Do I need to take separate registration in different state? Do I need to declare principal place of business respectively in the different state? Challenge. I'm a small player. And this was the point discussed and recommended. GST Council has said and recommended there would be simplified GST registration scheme for such small suppliers supplying through e-commerce operator. They did not require to take registration in a different state. They can take one registration. In all other states, they can mention address of e-commerce operator as a proxy, and so that their registration become only one, compliances become where registration taken, and in realistic term that becomes one nation, one tax, one market for small player. But we are awaiting detailed rules to come out. Nothing in the Union Budget 2026 pertaining to this, but that is how it was on the verge of recommendation of 56 GST Council meeting. Last and foremost, since IDT committee of ICI is taking all needful action, initiative, representation and opportunities, GST 80, a tribunal, now on the verge, 31 state benches are notified. Practicing chartered accountant is the authorized representative who can appear before GST 80. Question is, are we ready? Can we grasp this opportunity? Can we go beyond first appellate authority and argue before GST 80? GST is a new law and we all are practicing in GST. Why can't we give a push to ourselves and get ourselves prepared? See, 31 state benches nominated. Lot many judicial member and state members got appointed. They were asked to report on their respective state benches on 21st January, which they reported. So there's the concept of principal bench in Delhi. Principal bench consists of president, judicial member, two technical member, one from central, one from state. State benches, two judicial member, one technical central, one technical state. So that is how the composition all about. And all impugned orders passed from 1718, all order and appeal passed by first appellate authority since 2017-18, which is supposed to be filed before GST 80, a clarity order and notification that those orders passed till 31st March 2026, you need to file appeal before GST 80 by 30th June 2026. So any order passed after 1st April 2026, that will be governed by normal provision 3 plus 3 months as per section 112 of CGST Act. So my only point is, this is all online, digital filing. But we have seen in lot many cases, we have got manual order. It is not available on portal. How the online filing would be. So a lot of challenges when we look at GST 80 perspective also. But it's time to get ourselves prepared. So topic was union budget, but I thought let me draw this reference and create opportunity for all of us together. So I'm thanking Rajendra sir, thanking Umesh ji, who is the vice chairman of this IDT committee, thanking secretariat from IDT committee of ICI, and thanking each one of you for giving me such a patient listening. Thank you very much. I'm through. So in case any question, of course, we can take it up.
Thank you, sir. Thanks for the session, giving you valuable time. Just one question. One of the person has asked, especially to you. Hard coke is manufactured from raw coal. Presently, GST on raw coal is 18%, and and hard coke is 15 to 5%. There's a huge ITC to the taxes. Can it be defunded the ID under the new provision?
If that is the case which he is referring to, Mr. Anil is raising this question to my mind. Of course, you are allowed, provided you are not being debarred. You can just read because that notification specifically barring some of the sector. So at the moment, I can't say, but on the face of it, you are permissible.
Now the question is, tires, bits and fixtures are developed by the Indian supplier for a manufacturing foreign buyer and are retained in India with the manufacturer of machine parts for the foreign buyer. The question is whether such a transaction qualifies as export.
Impreet, where you are reading, can I read that question along with you? Which item number? Tell me, I will open that item number. I'm on question answers tab.
18 number, sir.
18? Yeah,
Yes.
18. Okay, dies, jigs, fixtures are developed by an Indian supplier for a foreign buyer, are retained in India for the manufacture of machinery parts for the foreign buyer. The question is whether such transaction qualifies as an export. Yes, this point has got no reference of intermediary discussion. This point is totally different when we look at dies and jigs fixtures are being developed with the privity of contract with a foreign buyer, foreign party. Now, this is being used in India. It is for them to use in India. Whether export, ultimately these are being used for manufacturing of goods which is going to be exported. To my mind, this is under litigation, but as per my opinion, it would be export and no GST should be charged. But it is under litigation. Disclaimer.
Any other question you wanted to take?
Which question, Impreet?
Any question you want? I mean, any question you want?
Now here, Impreet, I've seen. I don't know. I just read one Abhishek saying me Hindi में बोलो sir ji. Abhishek, this is pan India webinar. That's the reason. So not an issue. Uh, so if I look at, there were two important questions. Now question for hard coke. Now then another question which have come recently. Yes, Jane. In case of export of service, certain rework of material was required. Instead of rework in India, recipient did it outside India. Whether this would be treated as import of service. Now see, when some rework which was supposed to be done by you in India for export of goods, even for export of goods, something coming back for deficiency and you're repairing and then sending it back, no GST should be charged. That is your specific provision when you look at 13 subsection 3, I think, I guess. So I'm sure no GST should be charged, but try to understand and appreciate. Even though it is import of services, paying reverse charge, you are entitled to get the refund on zero rated. So that would be my answer, yes. Now Suresh ji is asking, so cause notice is issued for reversal of ITC on financial discount received by the dealer. Could you clarify further to defend the so cause notice? Now you can quote Suresh ji, circular number 251 dated 12th of September 2025 first, and second is a revenue neutral. See, when on financial credit note, supplier is not taking any adjustment, then why there would be question of reversal of ITC by buyer? And that was the basis on revenue neutrality. And that is how this circular is clarifying the position. So you can take this position to defend your past litigation. Sanjeev ji asking, a dealer is exporting goods to Afghanistan, payment is being received in INR through Vostro account. Would be this considered? Yes, no problem, because specified transaction through Vostro is permissible. Sanjay ji, no problem. Sanjeev ji, sorry, no problem. In case of Aditya Sharma ji, now he's asking, in case of post sale discount, if supplier have agreement with third party for 90,000 and supplier supplying to distributor at 1 lakh, at what rate distributor need to raise invoice to third party? As I said, and what would be relevance of financial credit note? So two question in your one question provided. See, when a manufacturer is having agreement with a third party and customer, I gave the example. for 90,000. But distributor, it is being supplied to 1 lakh. Then GST would be leviable on 1 lakh rupees when having agreement. Without having agreement, that would be independent transaction of distributor and dealer to the end customer. Financial credit note clearly explained, now it is permissible, stated in circular number 251. Even on revenue neutrality, we can argue. This is what I'm referring to. Now, CS Satvi Singh ji, should we pay RCM if services imported or used in export? Yes. See, export, you can always say that you are entitled to getting refund, but on inward, you must pay and then take credit and claim refund. That would be the right approach. But you got past litigation, then you can, of course, take a route of revenue neutrality. It is my personalized view. So it may vary from one expert to another expert. Now coming to Anil ji, whether any proposal in budget regarding relaxation of IDS in respect of refund of ITC on account of coal and hard coke, believe me, no specific. Budget does not provide Anil ji any kind of, this kind of changes. It will all come through GST Council. So you have to wait for GST Council, 57 GST Council meeting. But important is whether any representation is being sent. And what is your issue? Why can't you write back to IDT committee of ICAI? They can take it up and submit their representation. So anyone who is listening to today's webinar, any issue pertaining to indirect tax, you are most welcome to write back to us and we will compile and submit to the concerned authority. That is the right approach. Sapna ji is asking impact of inverted duty structure in case of book publishing house where only nil rated supply is there. Also whether RCM on royalty paid can also be considered for 90 ITC refund. Now please try to understand, nil rate means exempted. Please try to appreciate difference between nil rated. Nil rated is exempted. So inverted duty structure only when rate is applicable, but rate on output is lower comparing rate on input. That is how you have to look at. So Suresh ji from Coimbatore, export sales commission paid from India to commission agent in Singapore, whether RCM applies to this payment? Yes, now with the changes, definitely that is going to be applicable. Kirti Jain, commission agency services, agent based out of India to facilitate sale of goods imported into India shall now be considered as a zero rated services. Kindly confirm. So commission agency services, agent based out of India to facilitate sale of goods imported into India. So you're paying commission to an agent outside India, right? It's a case of reverse charge, isn't it? I do not understand. Kitty, what is your reference? I'm not getting properly. If agent is located outside India, then you are importer, right? So please look at from that perspective. It is import. Suresh ji asking, clarify where I gone? Yeah, clarify. Can we apply for refund of ITC in case of inverted duty structure as you explained in case of corrugated? Yes, indeed, yes, Suresh ji. You can definitely apply, no problem. Next, a dealer received incentive by commercial credit note and TDS deducted. Is this transaction liable to pay GST? No way. On financial credit note, it has been clarified by circular number 251 dated 12 September 2025. Mukulji, sir, distributor is giving credit note of 10,000 to dealer without GST, where the dealer is no need of reversal. That is what it is being clarified. And thus I referred and explained in my deliberation. Asna ji asking credit note on exempted supply be reduced from turnover for Rule 42 calculation. Of course, if you are reducing, then your pro rata reversal will come out. But what is the relevance of credit note? Of course, to that extent, my turnover is being reduced. To my mind, it should be reduced to that extent. Why I will pay on gross value? I will pay on net value, which is my transaction value for effecting the transaction, and that would be taken as a basis for reversal of Rule 42 and 43 reversal. Okay. Next one, Deepika. Sir, order pass under section 74 financial year before ending 16/5. How to proceed now? See, 16 subsection 5, you have all right because that is the, specifically stated. It is being given the, proper mechanism is being provided. Are you following, Deepika, that process under section 16, subsection 5? If you are following that process, then of course you will be given a relief in that regard, even though your order is time barred. Kindly look into that 16, subsection 5 carefully and follow the procedure. So, is it mandatory to pay GST under RCM on transport charges paid in case of exempted outward? See, please try to appreciate your outward is exempted, but inward, unless otherwise exempted, you are liable to, even though it is a cost. Let's assume other way around. Let's say some transporter charging GST to you, even though you are using for the exempted supply. Then what happened? It becomes cost to you. So can you deny that I will not pay RCM on transport unless otherwise exempted? So that is all whatever question I saw. So back to Impreet.
Yes, sir. Shyam, sir, I just want you to discuss one question. Declaration of baggage in which app to be updated?
Yes, madam. So with respect to the portal which is applicable for declaring the baggage rule, if it is accompanied baggage, it will be ADITI. The name is ADITI. It is the portal which is given by which is issued by the CBIC, where you can file a declaration if it is an accompanied baggage. And if it is an unaccompanied baggage, the declaration has to be made in the IceGate portal in Form CBD2.
Any other question?
So I think there is one more question regarding if there is any change in the personal used effects. See, in case of personal used effects, there is no change. If it is a personal used effects, no declaration is required. However, it is other than used personal effects, the declaration needs to be made to the customs authority before the passenger is leaving India. He has to declare and he has to get a certificate, which is a temporary export certificate. So it is when he comes back to India, he can show the certificate and he can re-import the goods which he has taken away from India. So this certificate is valid for a period of 6 months or the date of arrival to India, whichever is earlier. So this is with relating to the personal effects. And one more question is with relate to any budget applicability in case of solar energy. Yes, with relate to solar energy, there is a change in customs tariff, particularly with respect to import of sodium anemonate for use in manufacture of solar glass. The import duty has been reduced to nil from 7.5%. This is the amendment with respect to the solar renewable energy. I think there are no questions further.
Okay, sir.
Impreet ma'am, is there any other question?
No, sir, not more.
So
The
Impreet,
delegates are
Impreet, just 1 minute I will take.
not.
Yeah, so thanking all the participants who has taken out time from their busy schedule, thanking my co-speaker, Shyam Sundar, the young one. He made the presentation. He must be complimented because that is the way young, chartered accountant can come and make the presentation hand-holding. So he's also complimented, and thanking each one of you from my side for your word of appreciation, and to the whole team of IDT committee, Secretariat, Impreet, and of course Rajendra sir and Umesh sir. Thank you very much.
Thank you, sir. Thanks to
Thank
both
you,
the
sir.
speakers
Thank you.
and every participant. With this, we end up the session. Thanks to my chairman and vice chairman who planned this event in spite of their busy schedule, preoccupied, but they planned so apt speakers and so apt topics at the correct time when it is needed. Thank you.
Thank you. Thank you.
Thank you, sir.
Thank you.
I think we can sign off for the day.